Good evening to all the fellow members and Guntur branch chairman Sri C.A. Vangal Bhargavi Garu and my fellow committee members and today's speaker Sri C.A. Archana Jain Garu. Welcome to Guntur branch of SISF ICAI, madam.
Thank you to all.
Thank you, ma'am. And now I am handing over the proceedings to Chairman C.A. Vangal Bhargavi Garu.
Thank you, Abhinath. Sir, good evening, dear members. Welcome to today's webinar on GST updates by eminent speaker from New Delhi, C.A. Archana Jain, madam. Welcome, madam.
Thank you. Thank you. It is my
honor. Thank you so much, ma'am. Thank you so much for accepting our invitation and spending your time to enlighten our members regarding GST. GST, always we have some or the other doubts, and our members, especially Guntur branch members, are admired of your way of delivery. So there is a special request from our members that Archana Jain madam would do justice to the topic of GST updates. So I will do. So it's already 5:10. So as you mentioned that you have to leave by 7:30 due to your personal commitments. So we'll start the session, madam.
Thank you.
Yes.
Thank you, Bhargavi ma'am, Honorable Chairman of the Guntur branch. Thank you to all the organizers for giving me this wonderful opportunity to be here and to deliver today. And indeed, I'm also looking forward to be there in person very soon. And
Yes.
My hard luck that I missed this opportunity this time because of some travel issues.
Yes.
Otherwise, I would have been there only. So looking forward to see you all very soon. And thank you to all the participants who are here today, that they have spared their time and they are attending this webinar. And I hope I'm able to do justice to your time. So thank you to all. And before I start, I'll just open my podium with a small question to all the participants. And I will request that let this session be a two-way session, not just one-way session, so that we feel interactive and we can take care of the queries that are coming as and when they are having over there. So what is your take, all the participants, how you think that these budget amendments are going to impact GST? Are you happy with the new amendments, or there is something that you are really worried about? So I just need a quick response so that I can understand we are all on the same page or no.
Of course, ma'am, because since more insist is upon ITC restriction, okay, so all of us are worried about that only. So how we are able to take input tax credit despite of we are being a good and genuine taxpayer.
Correct. Very well said, ma'am. Very well said. And I also feel that all the amendments are made in such a manner that they are only targeting the person who are absconding the tax, and ultimately they're hampering the genuine business taxpayer.
Yes.
So if even if I have made all the commitments, I have done everything correctly as per the requirement of the law, but even if something has been done by my supplier, any mistake from his end, and that can also be a genuine person, he can also have some financial hardship, there may be some genuine reason. But again, neither he will be spared nor I will be spared. And what I feel is that who have to do all the hanky-panky stuff, they will never get caught hold of. You will never get them behind the bars, and the person who is actually a genuine taxpayer, he will be the one who will be facing the music. So yes, all the amendments are done, and eventually I also feel that this ITC, government don't want to give you any benefit of the ITC. There was a seamless flow of credit, the promise of which this GST was announced, or when it was implemented. But I think it is a dead of seamless. It seems that there is no ITC, because what they have done, 38, 41. If I read 38, they are saying whatever is restriction, you cannot avail. Then when I cannot avail, then how come 41 will be implemented? So what does they mean to say? That even if I was supposed to stop at a red light, even if I have jumped the red light, so I have to pay the fine of jumping the red light, and again I will be penalized under section 41 also, because 31 and 41, they both are exclusive sections. They are not to be read in the light of each other. So again, and when my humble submission is that if government has all the mechanism to understand that he can imply the restriction that other person has done some contravention, he has not made the payment. Why don't you stop him from filing the return itself, so that the amount is not reflected in my 2B and I am not eligible to take the credit? You got hold of that person only now who is committing the fraud or who is committing the hardship to me. Why you are punishing me for the deed of someone else? And when you have that mechanism, why don't you come forward and you put a check on the same? So what they are expecting me, they are expecting a taxpayer to conduct his business, to pay the taxes on time, and also to do all kind of monitoring whether the other person has complied with the things or no. So
Yes.
is it practically possible?
No, no, no,
It
ma'am.
is not practically possible. So we'll start. I'll just share my PPT.
Ma'am, could you please check with your voice because sometimes it is breaking and it is not that clear, ma'am.
Okay, just give me a moment, then I'll just put my headphones.
Please.
Is it better now?
Yes, ma'am. It's good now.
It's good now?
Yes.
Okay. So is my screen visible to you all?
Yes, ma'am. Yes.
Okay. So let's start with the amendments that has been announced. So these are the clauses under which all the amendments pertaining to GST was announced. So basic focus, as ma'am has also highlighted, was on ITC, matching principle. No doubt they have taken care of GSTR 1, 2 and 3. So they have finally announced for the first time in 4 years that please let all your hopes be over. There will be no GSTR 2, there will be no GSTR 3. So that means, why do you think that actually government has rationalized 50 section subsection 3, the rate of interest? Because rate of interest of 24% was directly linked with the matching principle, because section 42 read with subsection 4210 and 4310, these were the two provisions under which 24% of rate of interest was applicable. When GSTR 2 and GSTR 3, the original flow is not there, they cannot have a matching principle. Similarly, section 49, which was never implemented, that was also on focusing on the again on the matching principle. So when this matching principle is not there, that means there cannot be 24% of rate. So that is the reason they have rationalized the rate with respect to section 50 subsection 3, that it will be 18%, and this amendment is a retrospective amendment. So now the matching concept has been done away. Provisional availment of ITC has been done away. I hope you all will agree to me. Now there is no provisional kind of ITC. Why? Because the word has been amended from avail to take. If we see section 41 and 38, it will be very, very clear. The intention of the lawmaker is that now there will be no provisional ITC. Whatever ITC is there in 2B and which is not restricted, only you are eligible to take that credit. And the word is take, eligible to take, not eligible to avail. So now you are just like what you say, the all your strings with respect to your ITC are in the hands of supplier. You have to be very, very following up your suppliers, that he should be regularly filing his returns. The payment has to be made. Not just GSTR 1, but GSTR 3B also should has to be filed on timely basis, so that your credit is not disallowed. So this is the main core focus areas. Yes, there has been few welcoming changes like time limit for availment of ITC, the credit notes, the amendment, all has been shifted one more month. That means earlier it was September month's due date. Now it is 30th September. Again, so what is the actual date? Is it the November month's return or no? So what is my last day to avail ITC for the complete financial year or to make any amendment which was as per section 16 subsection 4 earlier as due date of September month return. So what will be the new due date or what will be the new last date?
October 20th.
Yes. So October month return. That check is filed up to 30th November. This is my understanding because October month return only we are going to file in November. So apparently there has been an increase by 40 days. One earlier it was due date. So if I would have missed the due date, everything would have gone.
Yes.
Now I am eligible to miss the due date by additional 10 days.
True.
This is the only additional thing that they have done to us. So this is one thing. So yes, many provisions has been amended or added, and one good example is 2B, Rule 61. So they have amended. Now they have made this rule in such a manner that now your GSTR 2B is a valid document. Earlier 36(4) does not had a validity. Your rule were amended, but that rule did not had any kind of backing in section. So now even section 16 they have added one more condition. We will be seeing that in detail. And with that only they have legalized the documents like GSTR 2B. Interest provision, obviously we have seen anomalies has been made, corrected also in many things like your 16 section has been amended, your 36 has been amended, your 38 has been incorporated, the sections of GSTR 1, 2 and 3 has been done away with, your 50 section has been amended retrospectively. So all these things. No roadmap to formation of GST tribunal. So still we are hoping, I don't know when GST tribunal will be formed. Old section used for the new provisions. First GST and restriction, then law is amended to ratify. So this is the new law's beauty. They do whatever they want to do, then they make an amendment in the law and that to retrospective so that all their acts are ratified. So now they have given more powers and yes, proper official definition has been changed. And can you highlight section 54? The refund section has been amended. So what new thing that we should be taken care of, that there has been one amendment that is really not in favor of the assessee. So can someone highlight that? Section 54, refund section.
Yes, ma'am.
Yes, ma'am. Anybody? There has been one amendment which is not in favor of an SSC with respect to section 54 if I talk about.
Okay.
Okay, so they have amended very smartly 5410. Earlier 5410, that is the power to withhold your refund, was only attached to 54.3. That means whatever refund they are granting you by way of inverted duty structure or by way of export of services, that was only one where they have the power to withhold. Now they say 5410, any refund pertaining to anything under this act can be withholded. So
Okay.
these are the small amendments that has been incorporated and which we may understand their implication in longer run, but very smartly they are making their changes as per their wishes. So now, yes, most important we'll start with, that is your input tax credit. So yes, as we have discussed, your section 16, that is the eligibility criteria of your input tax credit has been amended. Section 16 talks about the condition. So there are 4 conditions basically. One is that you should have the tax invoice, you should have received those goods and services, the person should have made the payment and the return should have been filed. So these are 4 conditions. Though section 16 subsection 2 clause C is under litigation, but still as of now these conditions are intact. Now what they have done is, apart from these instructions, they have added. This is one thing that they have added, and that has become applicable also with effect from 1st of January. The detail of the invoice or the debit note referred in clause A, that means whatever tax invoice or debit note or the document, tax paying document, has been furnished by the supplier in the statement of outward supply, and such detail has been communicated to the recipient of such invoice or debit note in the manner specified under section 37. That means it has to be there in my GSTR 1. Then it will be reflected my under my 2A 2B. Now it is 2B only. Then same thing. Now they have inserted that he has received the goods or services or both. Now they have inserted one more condition in the form of BA. Earlier was AA, that is with respect to your tax invoice. This is again second condition. The detail of input tax credit in respect of the said supply, that means what supply, those supplies of goods or services or both, which we are talking under clause B, the supply communication of such registered person under section 38 has not been restricted. What does it mean? It means whatever amount is being reflected in your 2B, there should not be a word restricted corresponding to it. The restriction can be like he has overutilized his eligible ITC, he has not filed the return 3B, he has not made the payment of the taxes. So there the word will be restricted. That means that amount is restricted for you. Though it is appearing in your 2B, but still the corresponding condition to it is restriction. So until unless this condition has been done away with, or if this condition is being removed, you are not eligible to claim the ITC of that particular amount. So this is the new condition. Though you may have received those goods or services, but in case this condition is not met out, you are not eligible to claim the credit. Now 43A has been done away with because that section itself has been omitted. So the provision has to be read with only section 41, and which has been amended as per the new amendments. Additional condition inserted for availing the ITC, that has been done in clause 99. That means the detail of input tax credit in respect of the said supply, the clause B supplies, communicated to such registered person should not have been restricted. That means all the conditions should not have been met over there. That person has made the payment, he has not overutilized the input tax credit eligible to him, and he has filed the return on the timely basis. So then only your eligibility to ITC will be finalized or freeze. So now C has been same, only section 43A has been removed from there. So what are the important points? That from GSTR 2A as well as from GSTR 2B communicates the details. So you have to see now 2B is also there. It's a valid document and the communication has to be done. Existing form GSTR communicates the detail in two types, that is ITC available summary table 3 and ITC not available in table 4. Now as per the new instruction, it will be again shown as restricted or not restricted. As per the instruction number 2B to form GSTR 2B, the GSTN portal communicates the credit as not available in the following circumstances. When it will not be available to you? Invoice or debit note furnished by the corresponding supplier is after the due date of 16/4. Now the new due date of 16/4 is 30th November. So that means any change, any amendment, any invoice, if I am furnishing, that means any month's return or any detail of a particular transaction, if I am furnishing in my GSTR 1 beyond 30th November date, that means beyond October return, then that will not be eligible to. Again, invoice and debit note where the supplier GST and the place of supply are in same state while recipient is in another state. That means that portion of IGST where the place of supply and place of registration is two different states, I will not be getting that credit. Proposed section 38(2) suggests the provision related to the cases from where GSTR 2B would communicate that credit is not available. It also provides that certain class of person can be prescribed by way of rules. They can prescribe certain class of person. A list of the following cases is given in subsequent slides. So we will be seeing them. So these way section 38 has really a game changer. Now it will be really a deciding factor whether whether that ITC will be eligible to you or no. So we have to be very diligent and accordingly. But still I feel that the complete mechanism is not available because something is beyond my control. Again, it is has opened the Pandora box of litigation. I'm sorry. So the ITC is based on timely compliance as well as the payment by of the tax by vendor. So that means I am totally dependent upon my vendor. ITC is available only if the invoices are appearing in my GSTR 2B. In other words, supplier has to file GSTR 1. The legislature has been vested with the power to impose condition as well as restriction in the form of GSTR 1. If the vendor is being restricted from filing GSTR 1, then the recipient is being penalized to a great extent. Suppose there may be some technical glitch. He is not able to file his return on timely basis, or because of some other contravention, his GSTN is cancelled or suspended. He is not able to file the return, but all other things are in place. Then also my ITC will be restricted. So he may get his cancellation revoked on a later period of time. But then we have to see that how the things has to be managed on the portal, because now what is happening is GST law is on one side and portal law on one side. Everything has to be mapped. But if you really go by the law and the way the portal is working, they are not still in sync. Even after the uh, lapsing of 4 years, still we are struggling with the portal, and it is not well versed. It is not in sync with the law as on date also. The system cannot be allowed to function unless the government start giving GST compliance rating. How come I know? Today I'm working. Let's say I have only one transaction with a person who is into non-compliance aspect, or who is not a regular supply, or who is not regular in his compliance or filing in the return. How come I know? Is there any mechanism? No, there is no mechanism. Every time if I'm going to buy something, I cannot undergo this whole exercise. Go and check the vendor profile, whether he's filing the returns on time or no, whether he's filing 3B on time or no. Even if he's filing 3B, how come I know he's overutilizing his available ITC? How come I can comply with the condition of section 16 subsection 2 clause C, that the payment has been done from the eligible ITC? How come I know whether the ITC he has been utilizing is eligible to him or no, whether it is restricted under section 17(5) or no? I mean, he may be a person who has certain kind of availability with respect to the ITC that has been restricted or blocked for a normal SSC under 17(5)(c). But he may have that kind of business model also. But how come I be ensuring all these kind of things? So, I mean, this is not a very easy task. And if government has all the mechanism intact, they have promised us that they will be providing the rating. So in case somebody is defaulting again and again, or who is a frequent defaulter, then either he should be highlighted, there should be some kind of mechanism to identify or to make the other person aware that yes, this person is he has these kind of modus operandi, so you should not be working with him. But as on date, nothing has been done so far. The GSTR 2A is also required to be amended to incorporate the column date of filing of form GSTR 3B, so as to ensure that the compliance of section 16(2)(c), that is with respect to payment. Otherwise, I cannot do so. Can you all correlate? Actually, the taxpayer has become this way only, that government is there and we are just dancing on their moves.
Yes, ma'am. Yes.
So now what they have done, they have completely revamped section 38. The detail of outward supplies furnished by the registered person under subsection 137 of section 37, and of such other supplies as may be prescribed. That means whatever the supply as per the definition of supply, we have to fulfill our GSTR 1 accordingly. And an auto-generated statement containing the detail of input tax credit. We all have seen that yes, now your input tax credit is auto-populated. And even I have seen some person has by mistake filed the auto-generated 3B, and there was some discrepancy, like your import data was missing. So who should be responsible? Is it not the government duty when they have made that 2B has to be functioning properly, then all my import data should also be there, but it is not there. So they have said that, okay, now all things will be available to you in the form of electronic format to the recipient, and of such supply in such manner and form within such time, that is, they have given a cutoff date, subject to such condition and restriction. So if restricted word is there, so you have to comply with that particular word also. So it will consist the auto generated statement as per section 38. It will consist the detail of all the inward supplies in respect of which credit is available to the recipient. That means it is not restricted. And along with that, the detail of supply in respect of which the credit is cannot be availed. That means either it has been restricted in fully or partly, or the account detail of such supplies has to be furnished. And this is the provision of section 38. It says the restriction word will be there, that will be communicated to the recipient so that he can take the action accordingly. As we have discussed, so now every registered person will be having the information whether this credit is eligible to him or not, and whether there any kind of restriction as a whole or as a part has been prescribed on that particular amount or not. That will be communicated to him. So all these things have to be incorporated by any registered person. The output tax payable by whom in accordance with the statement of outward supplies furnished by him under the said subsection during such period. That means all the detail has to be there. So all, if I am a supplier, I have to put in all the detail as per the requirement of the law, and accordingly the same will be communicated to the recipient. And now one new thing, if I have used my like, even if I have, let's say, 100 rupee eligible credit, and if I have utilized 120, so that 20 rupees will be barred to the other corresponding person also. So that means accordingly the proportionate. So I fail to understand how they will be dividing. Let's say I have taken 20 rupees additional credit which was not there in my input. So all my recipient, whether they will be restricted like 20 of 100, and I have availed 120, so that means 20% has been additional. So whether the restriction will be with respect to the 20%, or that complete 20% will be ineligible. So I don't know how they are going to bifurcate the recipient, but they have said in case I have overutilized my input tax credit, then the same will be disallowed to the other person also. And any person, in case if he has defaulted in discharging his tax liability in accordance with the provision of subsection 12 of section 49, then that restriction and condition will be prescribed on him. And there can be a prescribed class of person like on whom they can impose these kind of restrictions. So the impact will be to legalize GST or 2B and nullify the impact of Bharti Airtel judgment. We all know Bharti Airtel judgment, almost 900 plus crore judgment was there, amount was involved, and High Court has given a favorable judgment in the favor of assessee, but the Supreme Court has overruled that judgment. And I think that was a beautiful judgment because it said my books are the primary source, and they are the only source. So they should be holding a supreme position over 2A 2B. So what this Airtel judgment was, that even if some credit was not appearing in on the portal, but if it has been a part and parcel of my books of accounts, then I should have availed that credit. So the judgment said that you should not be relying or you should not be dependent on the portal's information. If you have everything in your books, then you should have taken that. Now you should not be getting the benefit that it was not on the portal, so I have not taken. So if it was there in your books, then why you have not taken? So that was the reason. But now what they have done is, because Bharti Airtel has said that whatever is there in your books of accounts, you can take, whether it is appearing in your 2A or 2B, that does not make any difference. So now they have said, no, hold on. If it is appearing in 2A, 2B, then only you are eligible. Why? Because now I have inserted condition under section 16. I have inserted 38. I have inserted 41. So you have to take care whether the same is appearing in your 2B or no. So this is the reason the whole amendment has been taken place. The present subsection to be omitted in entirety, as there is no requirement of furnishing detail of inward supplies by the taxpayer. So GST or 2B has to be done away because no matching principle is there. Now they don't require. Now they have given a new section has been inserted. Now they say we will be providing you the detail of inward supplies, and that shall be made available to the recipient in an auto-generated form, that is 2B, and whether restriction is there or no, that also we will be communicating to you. So you need not worry. As per subsection 2, credit reflected in auto-generated statement shall be classified into credit available and credit not available. Legalize the credit not available column. So now they have given the complete legal backing also. Section 38 has been revised to provide ITC will not be available to the recipient if supplier has defaulted. That means he has not filed or he has not made the payment for a prescribed period that they have already mentioned. That is only one period. Supplier has paid less than the actual tax payable by him. I don't know how come he can pay. So that means there is a gap between GSTR 1 and GSTR 3B. And similarly, the last condition, that he may have utilized the excess amount than prescribed amount. I don't know how can, I mean, if they have this much of information, so they should have that control also, that yes, then we should be one who will take care of his returns and he should not be allowed. But nothing has been done. Everything has been imposed on the recipient because you want to take the credit. As we have already discussed, your section 16 subsection 4 timeline, which was earlier prescribed as September month due date, has been extended to 30th 30th day of November. That means my October return should have been filed by due date or latest by 30th November. So that means my new extension has been extended only by 40 days, not by 2 months, only by 40 days. So earlier it was September month's due date returns due date, that means somewhere around 20th October, or if any case, any new extended due date. Now it has been 30th November. The word invoice relating to such omitted by the Finance Act 2020. So now they have omitted related to such word. So now it is not with respect to a particular invoice. Your debit note, credit note has been delinked from the invoices. The time limit for availing ITC is extended. Further, other timelines are also amended in line with this. So the date of taking the credit has also been extended. Yes, we know, but that has been extended by 40 days. So expression used prior to the amendment was due date of furnishing of the return under section 39 of the month of the September, which was usually confused because there were three different dates for the taxpayer less than 5 crores and more than 5 crores, that and to certain territories. Even the country was bifurcated territory wise also, the due date has been amended accordingly. So that was also creating a big confusion. So the people was confused between 39, that is 30th September, or whether it has to be 20th October or 22 October or 24th October, depending upon the type of the taxpayer, as the case may be. Since the date has now been proposed to be mentioned, the dispute regarding the date of taking the credit would come to an end now. So now everything has to be taken care in the month of October return. So basically now October return, whatever date you want to file, but before 30th November. GST authorities has taken the view that date of taking credit is the date of filing of the return, which comes either on 20 or 22 or 24th of the month. Hence, there may be anomalies in manner of execution the compliance of this provision, which has been now done away. That date of taking credit is the date of taking it into the books of accounts. Is this the correct view? As per my understanding, when something is in your book, because again and again, why I'm saying so, section 16 subsection 4, what does it talk? If you see that section, the word in law is take, not away. If you see section 16 subsection 2, it talks about eligibility to avail the credit. And 16.4 talks about taking. Taking means that something is there in my books, only a procedure to take it in the return format has to be taken care of. But yes, even Supreme Court has given an assent to it, but now they have made some amendment. But again, it is going to be a litigative issue, because here also the word is take. So that means something which is already in my books, that only I'm just taking in the return. If something has left my books only, then can I take it in return and can I take the benefit of the same? No. Ultimately, my books are the primary source of information of my business. So whatever expense, whatever purchase I have already incorporated in my books of accounts while finalizing the books of accounts is the final piece of information that has to be taken care of. I request all the participants to please mute their mic. My humble request to all the participants, please mute their mic. Thank you, ma'am. So now comes the big change. Section 41, whatever it was, everything has been done away. Now the new provision reads as, because there the word was to take. Can you all just see the highlighted portion? That take word has been amended to avail. That means no provisional availability of your ITC. Every registered person shall, subject to such condition and restriction as we have already dealt in detail, entitled to avail the credit of eligible input tax credit as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. Now he is entitled to avail whatever is eligible to him. That means whatever is free from any kind of restriction. I hope you all are with me. Yes,
Yes,
or
ma'am.
no?
Ma'am.
Yes, ma'am.
Okay. So now the new condition says that you are eligible to avail when there is no restriction. That means now there is no provisional ITC. Whatever we have seen earlier, that has to be done away with. So ma'am, what is your take now? As now this 41 has been amended with this budget only. So whatever notices earlier we had with respect to 16.4 timeline, are they valid?
No, ma'am.
We are on the same page.
Yes.
So that means that litigation can easily be again fought, because they didn't had any kind of backing. So
Yes.
that time the word was take. That means my books were my primary source of information, and any procedure, because for many months they were just saying freebie in lieu of GSTR 3. So that means that was never a return, and that return was also made a return after the ARP judgment, and that to a retrospective amendment. But otherwise, it was always a payment challan, where only the consolidate figures were punched in, and it was only a way of mechanism of taking the or discharging the taxes on timely basis. That's it. amendment to do away with the word take and bring in the concept of availment. So now only those credit is eligible which is not restricted, and you are able to avail the same. So no provisional availment of any kind of credit where there is some kind of restriction. Also, to remove the concept of provisional availment of ITC in this section, the concept of provisional availment was there in the model of GSTR 1, 2 and 3. So we have seen that yes, GSTR 1 original flow was there, you will be filing some information. There will be a time gap. Another statement GSTR 2A will be generated. Then you will be filing your GSTR 2. Your concept will be matched. Whatever is missing, you're able to communicate to the other person, and that can be taken care of. And final assessment will be done in the form of GSTR 3B. Whatever purchase and sale and whatever net amount is left out, you have to discharge your tax liability. That was the whole mechanism by which the GST law was implemented. Though that never took place, but still the law was drafted accordingly. So that was the reason all these provisions like section 41, even 37, 38, 39, everything was worded in that sync with that flow only. But now because that has been done away with, so now there is no provision ITC availment, because earlier section 41 was one section which was there to govern your provisional availment of the ITC. Now they say whatever you have to avail has to be restricted free without any string attached to it. Now 41.2 if I talk about, that has also been redrafted. The credit of input tax availed by a registered person under subsection 1 in respect of such supplies, that means whatever recipient has seen in his GSTR 2B, of goods and services or both, the tax payable whereon has not been paid by the supplier. That means I am the supplier, I have done some non-compliance, I have not filed my GSTR 3B on timely basis, or I have not filed my GSTR 3B. Then 38 itself says it will be shown as restricted. That means I'm not eligible to take that credit. So I fail to understand. When the restriction is there to impose under section 38 itself, then what is the provision? What is the requirement of this provision? That means it implies to tell that, okay, we have restricted under 38, but still if you have taken that credit by any way, by ignoring the red tab, by ignoring the red flag, whatever, you have filed. So in case you have overruled 38, no worries. Now you have to reverse the same under section 41. So it says, if I have availed something which was not eligible to me, because non-compliance on the part of the supplier has been there, and ignoring all, even if I have taken that, now I have to reverse that, and that too with the applicable interest, and that applicable interest is at the rate of 18%. So 38, one first checkpoint. If I have ignored 38, 41 is the another checkpost.
Okay.
So I have to reverse. If I have taken something, I have to reverse, and the reversal has to be with interest. So now there is two different things. 38 says don't take it. So if I have not taken, no interest, nothing. If I have taken, finally I have to reverse it because the same is not eligible to me. But now that reversal will be with 18%. No doubt, even if I am not taken earlier, then also re-availment timeline is there, re-credit timeline is there. If I have taken, I have reversed with interest. So whenever the other person will be complying with the provision, I am eligible to get the credit again. But yes, the interest portion has to be lost. That means that interest portion will become an additional cost to me. So we have to be very uh, diligent while availing all these kind of ITC. Provided that where said supplier makes payment, that means whenever he makes a payment of the tax payable in respect of the such supplies aforesaid, whatever we have mentioned, the same registered person, that means the recipient, may re-avail the amount of credit reversed by him in such manner as may be prescribed. That means recredit is still there. Whatever I have done, I am able to recredit the same. The benefit of the recredit is there. And earlier also we have seen there is no timeline. So section 16 subsection 4 earlier also was not applicable on recredit kind of portion of the credit. Similarly, the same timeline does not apply here also. So if I have reversed something, I want to take the benefit of recredit. So even if it has been done after 30th September, I'm eligible to do so. The other interesting aspect will be how you have to deal with the same in your income tax, whether like pre-period expenses or pre-period purchases, whatever you have to show it, you have to take care under income tax. But as far as GST is concerned, recredit is allowed to you. Only loss will be your interest in case you have availed and reversed. This whole aspect of punishing the recipient for the mistakes of supplier has been done away, so that all the judgments where the final verdict is in the favor of assessee, that he should not be punished for any kind of mistake by the supplier, has been done away. So Arise India, or even the Madras DY Patil case law, or even other case laws in Delhi VAT, they all are done away with, because this says whatever the law may say, whatever the judgment may say, but today the law is, in case he has exceeded the exceeded the limit, then he has to recredit the same. Sorry, he has to reverse the same. Though whenever the other person will be making the payment, he's free to take the same. So reavailment is there, that you can always do. Section 42, 43 and 43A has been done away with. We have already seen. So these 43A has never seen the day of light, and it has been done away. Now there will not be any flow of GSTR 1, 2 or 3, like the complete flow of GSTR 2 and 3. So all these provisions are redundant and they are of no use. So now we comes to the next provision, that is refund related changes. But before I go to this provision, I'll just take a quick review of any queries you have with respect to section 38, 41, 16, whatever we have taken care up to now, so that we can move ahead and without worrying for any kind of queries. So any queries by the participants? No, this really,
Yeah, I think no.
no, yeah.
Yes.
So I think either all clear or all clear. That really worries me. Anyways, let's move. So refund, section 54. So there has been amendment. GSTR 1, 2 and 3 return system envisaged the refund of excess cash ledger through return under section 39. That was written under the provision of law itself. Now, as that complete flow is not there and that could never be operationalized. So what we have? We have GSTR 1, 2B and 3B. So now 3B is there, but there under 3B, there is no mechanism to get the refund of cash ledger or additional balance in your cash ledger. So that is the reason now the person is required to file another form, that is RFD 01. But again, is it not a harassment to the assessee that because you are not able to put in place the right flow of transaction or the right flow of return, I have to go, I have to file another form, I have to go to the officer, I have to show him the document, though under section 54 there is no requirement of showing any kind of document or whatever balance you have in your cash ledger, because obviously under cash ledger you have submitted, then only it is appearing, or some TDS amount is there, there is nothing else than that. But anyways, now you have to go and file the return RFD 01, that's a refund form. Now, because you're at present, the refund is linked to your section 39 return, so you need to file an additional form. consequent to the amendment proposed in section 37 to 43, it is proposed that the proviso to subsection 1 of section 54, that is refund of any amount of taxes or any amount, that's 54(1), may be amended to allow for refund of any balance in the electronic cash ledger in the form and manner as may be prescribed. So any refund of any amount in your cash balance or cash ledger is allowed, and they will be prescribing the format also. As of now, you are working under RFD 01. There has been another amendment. You are now free to transfer any amount of cash lying in your tax account or interest head or any other head to any other head, or even to the any other head of the distinct person. Distinct person, that means the person who is having the same PAN, who is registered in other state but is having under the same PAN. So now the transfer is allowed. But if you minutely read that language, so it has been really not very well drafted. What first impression, if you read that language, I'll just read that language when it will be appearing on the slide. It seems that you are eligible to even transfer the tax amount. The placement of comma is in such a manner that it gives a bad impression that you are eligible to transfer any amount, even amount that is in your credit ledger or in your various heads of your taxes like CGST, IGST, and SGST. Credit ledgers are there. So whatever amount is there, you are able to transfer the same. But it is not this case. Only the cash portion, wherever it is lying, you are eligible to transfer. But again, restriction is there. S portion is not eligible because this is same under different state, you are not eligible to do so. Now 54(2), that has been rationalized with respect to the amendments that has been made by notification. So this 6 months time period for the filing of the refund from the due date of the return, where for the month in which they want to file the refund, that has been rationalized with respect to 54(1) other relevant dates. So now the relevant date for 54(1) and 54(2), that is with respect to your embassy's refund, your other UN consulate refunds, now the same has been in sync with the same timeline, and that is 2 years from the last return of the quarter or the month for which they want to file the refund. So 5410 talks about that they need to file the returns only for the period when they want to get the refund also. So there are certain conditions attached to it. So first they have to file their returns, and then they have to file their refund application, RFD 10, RFD 11. It is further seek to amend subsection 2 so as to align it with subsection 1 by providing timeline of 2 years, because 54(1) talks about 2 years from the relevant dates or the prescribed date. And there was an anomaly in relevant date also after subsection 14 with respect to clause A and clause E. A was for export of goods, B was for export of services, and there was E clause also. I'm talking of pre-First Amendment Act, that is before 1st of February 2019. That E clause was a saving provision for all kind of refund under section 54 subsection 3. That has been amended after 1st of February 2019, restricted that E clause only to inverted duty structure. So if you have some older books, you can go and you can compare clause E of relevant date prior to Amendment Act 2018 and post Amendment Act 2018. And in my last session with Natarajan sir, I have highlighted one issue. We both have really highlighted that issue with respect to the relevant date of any supplies to SEZ, that is zero rated supply. Because if you see the provision of relevant date, it talks about export. It does not talk about zero rated supply. It talks about export of goods and export of services. Export of goods means the goods are actually crossing the custom frontiers of India. But when I'm doing an SEZ supply, my goods are not crossing the custom frontiers. They are only crossing the customs of SEZ. The goods are not leaving India. When I'm doing export of goods, they are leaving India. They are actually moving out of India. But when I'm doing zero rated supply, they're not moving out of India. So the relevant date was in clause A was with respect to export of goods, because it talks about when the goods actually moved out of India or they crosses the custom frontier, that is my let export order date. And when I talk about SEZ, so I don't need a let export order date because they're only crossing the SEZ customs. Goods are very well within the India. That territory has been specifically marked that as a non-taxable territory, but otherwise that territory is on the lands of India only. So that relevant date has been incorporated in this amendment through this budget 2022 through this Finance Act. So this was one provision which I was talking about, 5410. Silently, earlier, any refund which was due under subsection 3, that means my export refund or my inverted duty refund, they have the power to withhold, but nothing beyond that. But now they say any kind of refund which is eligible under section 54, because that's the only section of refund that can be withheld, provided in case you are having some kind of pendency going on. So withhold payment of refund until the said person has furnished the return or paid the taxes, interest or penalty as the case may be. So now everything can be taken care of by virtue of this new amendment. Deduct from the refund due whatever amount they are going to refund to you. In case that amount is falling short, then whole amount. In case the amount is in addition to what is due from him, so they can partially set off whatever due to them, that is what is due to the department, and rest of the amount can be paid to the assessee. For the purpose of this subsection, the expression specified date shall mean the last date of filing an appeal under this act. So 5410 Act is proposed to amend it to extend the restriction as regard the withholding of the refund or adjustment of the unpaid taxes from the refund, and all type of refund can be taken care of. Now the explanation. This is what I was discussing. So explanation, new insertion has been made in the explanation of relevant date provision. In case of zero rated supply of goods or services or both to SEZ, developer or SEZ zone unit, where a refund of tax paid is available in respect of such supplies themselves or as the case may be, the input or input services used in supplies, the due date of furnishing the return under section 39 in respect of such supplies. That means whatever the due date, monthly or whatever the due date is, that from that return date, I will be calculating the 2 years time period. And it will be same for the goods as well as services. Earlier, for goods, we used to take whatever was mentioned in the provision for goods, and for services, we still have a saving clause that whenever amount has been received or date of invoice. But because it is an SEZ supply, so my amount will not be received in FIRC or in foreign convertible currency. It will always be in INR only. So accordingly, I have to manage it. So, but now they have said, no, whatever you are doing as zero rated supply, all will be taken care as under this provision, and the 2 years timeline will be calculated from the date of return only. And so they have cleared this anomaly. But again, to clear this anomaly, they took almost 4 years, and still one more anomaly with respect to SEZ is still there. Though the high courts have given an order in the favor of the SSC, but still the mechanism is yet to be initiated on the portal, and that is refund eligible to SEZ. I'm not saying refund all SEZ supplies. I'm saying in case I'm an SEZ, whatever procurement I have done, where I have discharged the taxes because of any reason, I should be eligible to claim the refund of the same as any other taxpayer. But as on date, the mechanism to claim refund by SEZ is not there. So relevant date we have already done. So I have also discussed this. Has been prior to amendment with effect from 1st February 2019. End of the financial year was considered as relevant date because there was no provision. So E clause was taking care of everything. So there the language was end of the financial year. That means, let's say for the period of 17-18, for which this period was applicable, this amendment was applicable. So 17-18, my last date was March 20. Why? Because for the financial year 17-18, 2 years has to be counted from the end of the financial year. That means from the end 31st March 2018, I have to calculate 2 years. So that is the reason the due date was available up to 31st March 2020. By virtue of Supreme Court suo motu judgment, I'm saying it on this forum, the period of 17-18 is still alive. Why? Because 90 days post 20th February 2022 is the last date on which the extension get expired and 90 days additional is being awarded. And that is for quasi-judicial and judicial, both kind of proceeding. The last judgment talks about quasi-judicial and judicial both. Earlier, it has not given that clarity, but yes, again, before reaching the final authority, we cannot comment anything because it's a Supreme Court suo motu writ petition. So my understanding is that writ petition benefit is available for the refund also, because that's also a judicial proceeding only. So accordingly, even 17-18, if somebody has yet not filed or still they have something in their hand, so I will suggest go ahead and file. What the max will be? It will be rejected only. So still you have the doors open to litigate that issue. But if you're not filing, then that complete amount will be lost to you. So there are certain procedural changes, that is cancellation provision as per section 29. So timeline has been really very stringent. Now he may cancel the registration of a person from such date, including any retrospective date. And most of the time we see whenever there is a cancellation, they write it as a suo motu cancellation, and they cancel with effect from 1st of July or whatever the date he has got the registration. So they have made that point also clear that yes, they have the power to cancel the registration from a retrospective date. The person paying taxes under section 10 has not has not furnished the return for the financial year beyond 3 months from the due date of furnishing the return. That means they have the timeline of 3 months. They have given the 3 months timeline from the end of the financial year, that still he has the time to furnish the return. If he has not furnished within this timeline, they have the power to cancel the registration. Any other person who, apart from that, who has been mentioned in clause B, that is apart from composition dealer, who has not furnished the return, such continuous period as may be prescribed, and that continuous period they have said is only 1 month, I suppose. So in case 1 month delay is there, you are liable to get your registration cancelled. Composition return, the return was earlier filed on quarterly basis. It is made and it was made annual. So now they have said, okay, annual return you have to file, annually one return. So you have given the timeline of 3 months. Therefore, this amendment is corrective in nature. So tax period has been replaced accordingly. Credit note also. So same timeline, earlier section 16 subsection 4 timeline of due date of September month was there. So the same has been extended to 30th November. No rectification of error. So for the rectification also same timeline. So whatever rectification you want to do in the transaction, because amendment of the return is not possible, what at the max you can do is you can amend the transaction. You can amend or you can rectify the transaction. Any kind of error, mistake, omission, whatever has been done, you can only correct. You can only take the corrective remedy only. So now the last date to do all kind of correction is 30th November. So that means your final return of the month of October. 3B, same, your 3B, whatever tax, input tax credit, reversal, not reclaim exactly, but whatever you have done, you have additionally claimed something, you have not taken care of some reversal. So whatever transaction you want to amend, modify, or error or omission has to be rectified, all such rectification can be done by 30th November. 8. TCS return, same has been synced with other provisions, 30th November. 37.1 and 37.2, they are going to be omitted because there is no requirement of two-way communication as they feel. They say only one-way communication is correct. So statutory backing gives the provision of Rule 59 sub Rule 6. The law provides that ITC will be communicated in GSTR 2B in a restricted manner. That is, they will be categorizing whether it is eligible to you, it is available to you or no, whether it is restricted or it is not restricted. So 37.1 has to be further amended. 37.3 of the CGS Act is proposed to be amended in order to remove the reference of 42 and 43 because they had been omitted. Accordingly, other provision also has to be taken care of because now what they say, if one particular month GSTR 1 is pending, then you cannot file the other month's return also. Earlier, what was happening is, even if you were not filing GSTR 3B, you were able to file all the months of GSTR 1. So all GSTR 1 were timely filed by the people who don't wanted to pay the taxes and they have not filed GSTR 3B. So now they have said no, even if there is 1 month delay in filing GSTR 3B, so first you have to file the GSTR 3B, then only you will be eligible to file GSTR 1. Otherwise your GSTR 1 will also not be filed. 39.5 is proposed to amend to reduce the timeline for furnishing the return by a non-registered taxable person from 20 days to 13 days after the end of the calendar month or within. So now that will again be, the last date will be 13th of the next following month only. This is in line with the other proposed date of GSTR 2B to pick up the data in the system. 39.7 of the GST Act is proposed to be amended to provide an option to the proper person furnishing return under proviso to section 39 subsection 1 to pay either the self-assessment tax or the amount that may be prescribed. That is, either you calculate on your own or whatever is auto-populated, accordingly you can take care and you can discharge the payment. We have to see that yes, whether the same was eligible to you or no, whatever amount of credit you are wanting to utilize, that has to be eligible to you. There should not be any restriction. Then only you are able to utilize the same. This is to provide the legal backing to the payment of assessment tax by quarterly payment. That is your QRMP scheme. (39.9) is proposed to amend to extend the last date for the rectification that has been shifted to 30th November. Now 39.10 proposed to amend to restrict filing of GSTR 3B for that period if GSTR 3.1 or 3B, if GSTR 3B for the previous tax period or GSTR 1 of that said tax period has not been filed. So that means now you have to file all your returns before you can file any other return of the next month. So let's take an example. If I have not filed GSTR 3B for the month of February, I will not be able to file GSTR 1 for the month of March. So now all the returns has to be filed before I can file any return of the next month. So it's proposed to amend to provide that the way by it has to be amended by way of notification, and they can give this restriction, or they can impose some restriction to certain class of the people, or even they have the power to exempt certain class of the people, like whatever they want to do so. GSTR 1 cannot be filed unless GSTR 3B of the previous year must have been filed, and this has been incorporated from 1st of January 2022. That means the rule has been given a legal backing also. That is levy of late fees. Earlier we didn't had any levy of late fees. Now they have implemented it. So late fees has been dropped for non-filing of GSTR 2 and has been made non-operational. 52 read with Rule 67 of the CGST rules require registered person to collect taxes collected at source and furnish GSTR 8 to submit statement of supplies through an e-commerce operator. And presently there is no late fees for GSTR 8 also. Amendment is proposed in section 47 to include 52 in subsection 1 of 47, so the late fees can be levied in case the person is not filing GSTR 8 on timely basis. And the late fees can be 200 rupees per day or INR 10,000, whichever is low. So similarly, proposed amendments to section 38 There shall be no requirement to furnish detail in inward supplies, so that will be auto-populated. Consequently, amendment is proposed to be there in section 48.2 also to omit the requirement of furnishing the detail of inward supplies by goods and service taxes. So you see, all those provision which were related to your matching concept, so long, for almost 4 years they were pending and nothing has been done. So whatever amendment they were doing by way of rule 36, by way of rule 2a, matching concept, whatever they were doing, whatever ASMT 10 they were issuing for mismatch, everything was not backed with law. Everything was done away only through notification, through amendment in the rules, nothing else than that. Your main statutory provision didn't had any such kind of provision to impose those restrictions. So now all these amendment in various sections, subsections, sections and subsection like 37, 38, 48, 40, 52, 41 has been taking care of all those amendments with respect to your matching concept, your GSTR 2A and 2B, the restriction implied by Rule 36 sub Rule 4. All of these amendments are taking place of all those things that has been done earlier in the past. So now they are rectifying all their acts of the past by making all these amendments in the law, and now those provisions will be having a legal backing. So that's why I have asked that question, and even ma'am is on the same footing that yes, whatever they have done prior to these amendments does not have any legal backing. So that are easily challengeable. The only problem what we face or what we all face is that we have other things to run. We have our businesses to be run. So every time we cannot put up a litigation. We cannot just start litigating all and each and every issues under the law. But we have to understand, and even the department has to understand that whatever amendment they are making or they are proposing to make, they should not be hampering the business or the running of a genuine business. Otherwise, who is going to pay the taxes? In case tomorrow there will be no business for me to conduct, then how I'm going to pay the taxes? How these big figures of 1.5 lakh crores or 1.33 lakh crores will be achieved? They are being achieved by the taxpayers only. And what is the percentage of all these malified intentional taxpayers or the fraudulently transaction going on through these person? That is only in some fractional percentage. So to avoid that fractional percentage, you cannot make law to hamper that larger uh, percentage or larger portion of your taxpayers will be getting affected of the same. So we have to take care, and even department has to understand this point sooner or later. 43A has to be omitted wherever it is being mentioned because this whole section has been done away with. 4910 of the CGST Act is proposed to be substituted, so the utilized balance of CGST and IGST in cash ledger may be allowed to be transferred. So see, it is only, sorry, unutilized. So it only talks about unutilized balance of cash ledger of CGST and IGST. No SGST. Why? Because they say that SGST have the color of the same state. So whatever balance is there in SGST, you are not supposed to transfer it. So does not it give you an impression? That means whatever balance I have in my SGST, CGST as a credit, I don't have any owners. I don't have any right on the same. It is in the custody of the department itself until and unless I use the same. And by virtue of this amendment, it is giving a clear indication that even if my cash that has been mistakenly or is lying idle in my SGST account, I am not eligible uh, to transfer it to my other unit, or only option left out is to go for the refund mechanism. So that means the custodian is lying with the state only. It is not lying with me. And that amount is not free from lien. That means there has some kind of custodian with respect to the state for which that particular amount has been segregated. The government has notified Rule 86B mandating the restriction. Now, so now they are rationalizing whatever restriction they have imposed by Rule 86 sub Rule B, 86B, where they said, okay, this much of amount, 99% you have to use and 1% of additional has to be paid by the cash portion only. Barring certain exclusion has been made, but otherwise, so they have the power to give the rationality of imposing those taxes or imposing the restriction on utilization. So earlier that law does not had that backing. Law does not had anything such that. My section 16 subsection 2 does not had any of such kind of restriction where these kind of restriction can be imposed. But now, yes, now they have ratified various provision under which this Rule 86B also got the legality. So now has recommended that it would be appropriate if the provision under section 49A is made in such scenarios. Amendment in section 49(4) and introducing 49(12) is proposed to empower the government to prescribe the maximum portion of output tax liability that can be discharged by electronic credit ledger. So the rule has been, the section 49 subsection 4 and 12 has been amended in such a manner to give the legal backing to whatever the act has been done in past by the department. Now this is one welcome amendment, 54, sorry, section 50 subsection 3. There was large hue and cry. Despite our finance minister addressing the nation has already declared that it has to be on the net portion only, not the gross amount. But still, the notification was not issued, and department failed to recognize even the words of finance minister. They say no, because there is no notification, we cannot go by whatever has been announced. So now, finally, the final nail has been hammered, and now it says that yes. And the beauty of this new amendment is that a beautiful word "and" has been used, so that it is in sync with my earlier regime. Now it says input tax credit has to be availed and utilized. Earlier it was only availed, wrongly taken. Now wrongly taken and utilized. So in case anything is appearing in my only credit ledger and which has not been used, no interest. That means I'm not eligible to pay any kind of interest, because that was only lying idle. And as I said, this is the another point to highlight, that yes, this shows that availment does not make that amount eligible amount to me. Availment is there, so that means I am not rightfully holding that amount. Availment and utilization. So when I'm utilizing the amount, then only I'm using that amount. Otherwise, it is in the custody of the department only. Because as per, if you read the Compensation Act, it says whatever balances are there in these heads, it has to be taken care at the end of the year in such a manner. That means all that amount is having in their own custody itself. So now it says whatever amount I have wrongly availed and utilized, then only I have to pay tax, and the tax has to be, sorry, interest, and the interest has to be at a fixed rate of 18%. Various notification has been issued and amended in nexus to the same. So now that 24% rate is nowhere mentioned. It is mentioned in this subsection, but nowhere it is, the implication of this 24% is nowhere. So section 50 subsection 3 of the CGST Act is proposed to be amended retrospectively, that is with effect from 1st of July 2017, and in order to levy interest on only ITC wrongly availed and utilized. So similar amendment has been conducted, and now the rate has been freezed at 18% with effect from 1st July, and it is a retrospective amendment. So some miscellaneous changes we will take care. So retrospective notification on common portal. So 114 of the finance, they have said that now that common portal has been notified with effective from 22 June, because that notification was before 1st of July. So that retrospective amendment has been done. So now it is a recognized portal, and that has been done. No GST on supply of unintended waste generated during the production of fish meal in term of clause 116 of the finance bill. It is proposed that GST would not be applicable on the supply of unintended waste generated during the production of fish meal, like except fish oil, and that is also again an retrospective amendment. However, GST paid, if any, during this period will not be given as refund to you. And the same thing happened even in the license of the liquor. So that they have also exempted, but whatever tax has been paid because of the anomaly of the interpretation, that will not be refunded back. The next point is that only grant of alcoholic liquor license. So whatever has been paid has been paid. So you will not get the benefit of the same, because they believe as it is an indirect tax, so you have already passed on the burden to some other person. So in case some other person has already borne the incidence of the tax, then you should not be eligible to claim the refund of the same. So these are the amendments that are applicable. So Aadhaar authentication is mandatory, like furnishing the details of your bank account. Clause AA inserted in section 7(1) with respect to 1st July 2017. Then that is activities or transaction by a person other than an individual to its member or constituents or vice versa for cash, deferred payment or other valuable consideration. So this insertion has overruled the Kolkata Club judgment, where the Honorable Supreme Court has decided that one cannot give services to its own member. A club cannot give services to its own member, but that has been overruled. Now they say even if it is giving any service to its member or constituents, it will be falling under the definition of supply. So 16(2) subsection A, again we all know this has been made applicable from 1st January itself. No input tax credit shall be availed by registered person in respect of the invoices or the debit note, the detail of which are required to be furnished under subsection 1 of the 37. That means that has to be reflected. The detail of this invoice or debit note has been furnished by the supplier in the statement of outward supplies, that is my GSTR 1, or using the invoice furnishing facility, that is IFF for QRMP, and the detail of such invoice or debit note has been communicated. Communicated means there has been no restriction on the same. The word restricted is not there. That has been communicated means that is appearing in your 2B and there is no restriction on the same. So general provision relating to payment of taxes for the purpose of this section. Expression self-assessed tax shall include tax payable in respect of the detail of outward supply furnished under 37, but not include the return furnished under 39. That means I have the provision of that making the payment as per the wages scheme launched, like your QRMP scheme, where I may not be discharging the full amount, but I have a option to discharge some portion in cash. So that is the way they have rectifying this provision, that now that will be calculated and it will be including in my self-assessed tax. So these were the few important changes in which I would like to highlight and which I have given to you through this deliberation. I'm opening my forum. So anything that you would like to ask for the question, and in case you want, I can just revise that provisions once again in a summary format, because we have time left out in our hand. So person paying the various amendments that we have discussed today, they are with respect to main provision that we should be taking care of is input tax credit. So that was the basic highlight of the complete budget. So new provision has been inserted, like section 38, 41, they were amended. Your section 16 have been inserted with new condition. So they have only ratified whatever has been done by them in their prior periods or in past, and they have added new condition. Something has to be communicated. That means your 2B has been now streamlined and it has been legalized. In case there is there is no restriction on the amount that is reflecting in your 2B, you are eligible to claim the same. The condition has been prescribed now. Now earlier there were 4 conditions in section 16 subsection 2. Now there are how many conditions? 6 conditions. Apart from those 2 more has been added. One is that amount has to be reflected and the tax has to be paid, and there should not be any restriction on the same. And the supplies for which we are talking about, the tax on the same has been discharged by the supplier. Then even in your section 16, if I talk about section 16 subsection 4, there has been amendment. Whatever the last date that was prescribed under the law has been extended to 30th November. So this was the amendment with respect to 36. Then comes the section 38, where they have added that yes, whatever communication, whatever return has been filed by the supplier, the communication has been done. The communication has to be done to the recipient. The recipient will be downloading that to it 2B, and in case there is no restriction, then whatever credit is appearing which is free from any kind of restriction, he is eligible to claim the same. Now comes 41. It says in case you have exceeded your limit in 38, this is the timeline. Kindly reverse the same with interest. No doubt they have given you the eligibility to reclaim the same once the default has been corrected by the supplier, but that interest portion is going to be your loss. Then comes 54. 54, they have made three amendments. One is 51, 1 has been rationalized, then 54 2, the timeline has been extended to 2 years. 54 3, the timeline relevant date has been discussed. SEZ got their finally they got their relevant date, and which is the end, has to be calculated from the end of the relevant period's return. Then 5410 has silently amended and given more power to the department to withhold or to adjust the refund amount the way they want to adjust. So this is one way of giving more powers to the officers. And then various provisions like 49 has been amended so that to ratify the payment of taxes, the self-assessment tax can be calculated. Whatever payment are being discharged through QRMT scheme can be eligibly called as self-assessment tax. Your 49A has been omitted, 42, 43 has been done away with. Your legal backing to Rule 86B has been done. So now the department has the power to invoke and to dictate this is the amount of ITC we will be allowing you to utilize. Rest all has to be paid in cash. So by way of these amendments, they have ratified Rule 86 also. And after that, if I talk about, so these are the provision under which they have made the amendments, and they have done away with the matching concept. They says now there is no requirement of two-way communication. Whatever amount has been discharged or whatever the information has been punched in by the supplier will be communicated to the recipient, and he can take note of the same. They have given the portal a legal validity. Now the portal has been given the legal backing. So whatever hiccups they thought that were created by the portal has been done away with. Welcome amendment in section 50 subsection 3 has been there. So now that has been amended. A important word and has been used. So now that means whatever wrongly claimed or whatever additional ITC has been availed, that should be utilized also, so that the invocation of interest can be there. And if there is some kind of availment and utilization, so interest at the rate of 18% can only be charged, because now there is no such provision of 4210 and 4310. Both the sections has been done away with, so no additional rate of 24% can be invoked. And here when I'm talking of section 50, because we are undergoing our first phase of audits by the department, 17 18 and 18 19, I would like to highlight, in case any one of you are facing any kind of audit by the department and they are raising any interest portion on wrong availment or additional availment of transitional credit, then we can give them a tough fight, because input tax credit definition does not include transitional credit. Section 50 does not hold the power to imply or to apply interest on any amount that has been transferred as transitional credit, because under section 50 it talks about only input tax credit wrongly availed or amount taken as input tax credit. When my portion or when my thing is not included in input tax credit definition itself, then that the same cannot be charged any kind of interest under section 50 subsection 3(1) or any other provision of section 50. So this is the whole aspect or whole gamut of the amendment that has been proposed in this budget of 2022. And yes, transfer of amount of any cash amount that is available in your tax or interest or late fees, that can be transferred, but only amount pertaining to your CGST and IGST within the same territory. If you are having any other registration, or to the distinct person, that means any registration in another state on the same PAN, there only you can make the transfer. But even that cash portion of SGST, that cannot be transferred. So these are the changes that I would like to highlight and I have discussed with you. So I'm opening the forum. So any queries that you would like to ask? or any topic. And one more topic, everybody were looking forward, because now the e-invoicing uh, turnover has been reduced. The threshold to issue the e-invoice has been reduced from 50 crore to 20 crore. So that means now more people are coming under the ambit of e-invoice. And we have seen there 20 crore in trading aspect is not a big amount. But again, it is not applicable to all the person who are falling under the bracket of 20 crore or more. A person who is into dealing in, let's say, unregistered person only. So when you are selling it to an unregistered person, we have to see whether that, and first of all, the threshold, how the threshold has to be seen. It talks about previous year. So that means anybody who is having a threshold of 20 crores or more in the previous year have to fall under this ambit. Otherwise, the definition was only previous year, previous financial year. But now they have amended in last amendment. Now they have said that it can be any year from 2017 till the last financial year close. So any year if you have crossed 20 crore, that may be eligible to you. So again, the same restriction that are applicable on the e-invoice will be applicable to you also. So there we have to see for SEZ units, again this clarification is there. They don't have to use e-invoice provision. But yes, in case you're doing exports, then you have to raise an e-invoice for all kind of, otherwise all kind of tax invoice, debit note, credit note has to be mapped through e-invoice portal. So everything has to be communicated to the e-invoice portal, and accordingly you can map and you can raise your e-way bills also. So these are the provisions that are applicable. So similar lines, only what they have reduced is they have only reduced the threshold of 20 crore, sorry, 50 crore to 20 crore. Otherwise, it is applicable to whatever the conditions are there, the same are applicable over here also. So anything that would like to highlight?
Any queries from your side, dear members?
Because we have time in our hand, that's why
Yes,
I'm asking.
yes, yes.
Or any point that you would like to discuss, or any queries that any issue that you are facing, because there may be some departmental audits going on. Anything that you would like to discuss over here?
Madam, there has been so many notices regarding 2A versus 3B up to 2020.
Yes.
Okay, so how to deal with that?
So ASMT 10 you are talking about basically.
Ma'am?
Or ASMT 10, basically they issue this notice, and there is a mismatch. So yes, and to my astonishment, they are even issuing the mismatch notice for 17-18 and 18-19, and there
Yes.
they are saying it is not
Yes.
reflecting in your 2A. Or one more step moving ahead, they say it is not coming in your 8A, that we are matching, that you, or the amount detail that you have punched in your GST 9. So please make a note. 17, 18, 18, 19. There was no 2A to B. Rule 36, sub-rule 4 was introduced on 9th October 2019. That means it is applicable for 1920, not before that. There were many guidelines or press release by department that this 2A is only a supporting document for making your reference or making your matching easier in the absence of 2A.
Yes.
It should not be a supporting document for your ITC availment. They have themselves clarified. Even in ROD, that is removal of difficulties order, they have said that 2A is not the primary document for your availment of ITC. For 17, 18, 18, 19, 19, 20, they have themselves given an exemption of not uploading 8A. So there was no requirement of uploading 8A. 8A has not capturing the data. It was not capturing the data properly. My import data was not captured. How many other, my ISD data was not captured. So 8A cannot be a document. So we have to prepare our reconciliation as per our books, as per our GSTR 1 and 3. whatever amount you have taken in your 3B, that has to be backed by your books of accounts. You have to make a reconciliation, you have to submit, and you have to submit with the legal backing. And with this new amendment, proposed amendment in Finance Act 22, where they have inserted the provision in 16, that also gives a legal backing that now that a document is a valid document. Before this amendment, there was no legal backing. That is the reason they have to introduce this amendment. If that document was a legal document, then what was the requirement of these amendments?
Yes.
So this way we have to clearly highlight these issues. We have to give the references of the press releases. We have to give the references of the clarification issued by the department. We have to give the reference of removal of difficulties order initially, where they have given this clear instruction that 2A has to be only taken into consideration for your references. It is not a document. Second, they have given the exemption of not disclosing the detailed bifurcation of ITC in your night. 8A was not to be mapped. 8A only came into picture for the last audit reports that has been uploaded. That is for 21, not before that. So you have to give reference of all these documents. You have to give elaborate reply to them, and you have to clarify the mismatch. In case the calculation is auto-populated, you have to give your bifurcation. This is the amount I have taken. These are the period or these are the invoices for which it has been appearing, and you can take the reference of the same.
Okay, ma'am. Thank you.
Yeah.
Ma'am, can I ask?
There is a question by Ajay Agarwal. I fail to understand why all bank detail they are asking. See, bank detail you need to apply or you need to upload where you have some kind of refund. You want that refund to be processed in a particular bank account, you need to put the detail. Otherwise, one bank account, if that is the only, I mean, from where you're discharging the tax payment, all that is sufficient. There is no mandate requirement of putting all the bank details, because bank detail is what? One is for your basic KYC kind of thing, that yes, this is the bank account you're holding and this is the person in whose account your funds will be transferred. Because whenever there is a question of fake invoice, they generally ask you for the bank statement, in which account you have remitted the amount. And similarly, when you are talking, when you're taking some kind of refund, so that time it is there. So refund has to be processed in some bank account. So that is the reason you need to put. So see, they have levied a penalty of 20,000 during the audit. I understand that, but you have to fight. You have to give a proper reply. There is no legal backing. You have to see under section 22 registration. They have mentioned bank account, but they have not mentioned that you have to put all the bank account, because it is not something related to your place of business or additional place of business, where it is a mandate requirement from wherever you are doing your or you are giving services or you are selling your goods. You have to put a detail of that. But for bank account, there is no such mandate requirement. So you can always give a reply to them and you can always fight for it. Now, after, ma'am, I have applied for cancellation of registration due to death of proprietor, but the same was rejected. Notice was issued but not responded. Now, after 6 months, they have suspended the registration for non-filing of return. Kindly suggest. You have applied for cancellation, but that I'm sorry, but that cancellation never happened. They have given a notice and you have not replied. So in last amendment, we have seen, even if they have given certain period, in those period, if you have filed for the cancellation and it has been cancelled or suspended or not taken care of, you can go and revert to your adjudication officer. That means your assistant commissioner of your jurisdiction. You can put in a written request. Kindly do all your communication in writing, get a proper acknowledgement of the same. You can request him, you can provide the additional document. You may take the cognizance of the extended period, because this notice is also again a judicial proceeding. So whatever judicial proceeding is there, you have the extension. So today also you are eligible to file the reply of the same. Take the printout of the Supreme Court suo motu judgment, go and file the reply and take the corresponding action that is required, so that your this registration get cancelled. And once you have applied for the cancellation, you have the valid reason, because it is in the case of a death of a proprietor. So that means the business is handed over to someone else. The business may have been taken over or may have been done some other arrangement, whatever that is. So accordingly, you have to take the reference and you have to go and put a writing submission for the notice that has not been replied online, you have to give an offline reply to the same to the assistant commissioner of your jurisdiction.
And one more question regarding construction services.
Yes.
We have TDR, right?
Yes.
So for this transfer of development rights, this builder has to pay under RCO.
Yes.
Okay. So as on the date of OC, whatever the portion of unsold stock of builder or landowner, we are in confusion.
No. See, TDR has to be paid by the builder.
Yes.
So unsold portion of the builder, because now what arrangement is that either he'll be getting cash,
Yes.
or he will be getting some units, which
Yes.
is the basic way of handling these kind of arrangements. So whatever portion is available to him, he cannot go and ask for the developer. Sorry, the landowner. That's a different segment. So TDR is applicable only on him. So his portion.
Unsold stock of builder as on date of OC, right, ma'am?
Yes, yes, yes. So any notice, any person who is handling GST departmental audit as of now, I have few interesting observations.
Yes, ma'am.
Some audit is being conducted at my client in Nasik, basically, and they are into job work, yarn manufacturing and job work. So what beautiful point they have highlighted. You got the goods for job work. I said yes. Job work has been defined under section 141. I said 143. I said yes. It talks about a registered person sending his goods to a person for job work or for further job work. He said that when you receive those goods for, let's say, five kind of services or five kind of processes, four of those processes were being conducted by me. One of such process, even we didn't had the facility. So what we did was we transferred those goods to someone else to get that process done. And we got the invoice of the same, and we have completed the process, and we have delivered goods back to the owner. What now the contention of the department? How come you have transferred the goods to conduct that process to someone else? That means you have subletted the job work. I said, so where is the bar? He said, no, you cannot get it. You cannot get the job work done. I said, I never asked that it is a job work. It is a manufacturing thing. Even if it is not a job work, it is a supply. Other person is giving me a tax. He is charging tax on the particular amount, and I am giving the same to the other person. I am consolidating the things, and there is no restriction under the law. This is my understanding. I just wanted to discuss with you all in case you have any other observation. Am I allowed to get some process or some part of the process from someone else which I am not doing in my in-house? Is there any restriction under law? I don't think so there is any restriction. That is a supply. I'm getting that supply done by someone else if I'm not doing. It is just like VRCA. If somebody comes to me and say, ma'am, you have to incorporate a company. I don't do ROC work. So does law bar me from getting that work outsourced and deliver it to the client? And I don't have a requirement for to disclose that who has done the work to the client. I don't think so there is any such requirement under the law. But these are the observations. Second observation is cess on the coal is lying in my credit ledger unutilized. So they have highlighted that you have availed the cess and you're not utilized, so kindly reverse it. I said, my property, I don't want to reverse the cess. Why you are forcing me to reverse the cess? And third one is what interesting. One more aspect is why you are claiming the credit of coal, because coal is used to generate electricity and electricity is out of the ambit of the GST. I said, where is the bar on coal? You yourself has issued a notification 79 where it says that if I am exporting something and I have the cess amount in my credit ledger, even if the cess is not applicable on the outward supply, still I am eligible to claim the refund of the same on the portion of in proportionate to my export turnover. So that means that cess has to be there in my credit ledger. Then only I will be able to claim the refund of the same. To to have the cess in my credit ledger, that means I will be taking the credit of my coal also, then only cess will be there. So where is the bar? And otherwise, all the inputs that has been used with an intention, in use or intended to be used for the furtherance of the business is
Yes.
eligible as per section 262. Only thing that is bar is whatever has been restricted under section 17, where the credit has been blocked. If something is not blocked under 17, then how come you have a restriction on the eligibility of the credit? So these are few issues which I had just handled in the morning itself. So they are very fresh in my mind. So I would like to share with you all. So that's why. So these are the things that are coming up. So whenever there is a and yes, again 2A 2B mismatch, 17 18 2A 2B nahi match karta hai. 18 19 there is a mismatch. So I have explained it, sir. It came, the provision only came in October 19. Why you are asking me for 17 18 and 18 19? Department itself has clarified it is not a valid document for these years. So why you are asking me to uh, do anything on the aspect of the document which is not a legal document at all by your own virtue?
Yes.
So these are the few issues that came across to me just an hour before our webinar. So I just wanted to highlight those. So any interesting aspect you people are facing while anybody is facing departmental audit? So I would like to hear.
I think
Because I think,
we are receiving
yes,
all the queries relating to 2A, 3B mismatch only. All,
yeah.
yes, ma'am. Yes, yes.
Because I have seen, I hope no department person is there as a guest over here.
Ma'am?
Madam, I hope none of the department person is attending this webinar.
No, ma'am. No, no.
So I was sitting in the department office last week. He said, okay, today you don't have any work. Just download the SSC list and issue
True.
mismatch notice to all.
True. That is what
So what
happened.
he has to do, he has to just click a button.
Yes.
And he said, okay, today's work is done.
So they are flowing like anything, ma'am. Those notices are flowing like anything.
Even now, because of this new amendment in the proper officer definition, all the sleeping cases of DRI, they are again woke up. They are again active and they are again asking you with all the details.
Okay.
So all the DRI notices that you have received from Kolkata or Mumbai, they all are active now. So they all are demanding, and that is only with respect to one issue, and that is 9610. Which has been amended 5 times, 4 times department himself does not realize that they are amending it wrongly. 5th time they amended it. Then on the same day they gave another notification 54/18 and they forgot to make that notification retrospective. And in 125 circular they have very well clarified that this amendment was not retrospective. Whatever has been done in past is eligible to you to claim as 9610. From this date onwards, you are not eligible. But DRI people are asking the detail from 17 onwards. And one more myth they are selling. You pay your taxes today, take the credit and claim the refund. And assessee also feel okay. Because he feel okay, whatever I am paying, it will be coming in my credit ledger and I will be taking the credit of the same and I'll be applying for the refund. So I simply asked him, sir, import means your bill of entry has to be assessed. Whatever bill of entries has been assessed in 17, 18, 18, 19, how you are going to amend them today? They have issued the amendment, they have issued the notification 16/20 dated 23rd March, where they have said, okay, you pay the taxes, you pay IGST portion, you claim the benefit of 78, 79 with respect to BCD and other levies, and we will allow you to use 9610. That is can be done from current date or 1 year prior to that date. Until then, where I have the timeline to amend the bill of entry. But under custom, amendment of bill of entry is restricted to certain issues. Only for those issues bill of entry is allowed to be amended. But for the reassessment of payment, how will I get and I'll get my bill of entry reassessed? And if my bill of entry will not get reassessed, how come I'm paying the taxes under section 5 subsection 3 of IGST, because there the assessable value has to be taken as whatever has been decided under Chapter 3 of Custom Act. So everything is linked. So we have to be very cautious before taking any kind of stand with respect to these kind of notices.
Yes, ma'am. There is another query from member.
Yeah.
The department has levied interest for delay in filing 3B for April 20, May 20, and June 20. Even though the date was extended due to COVID-19, returns filed within extended due date.
So you have to give that, because see what I told. You are a taxpayer. You have to be tracking each and every amendment, each and every notification, each and every extension. He is sitting on the other side. He has the power. He can speak whatever he wants without any legal backing. You have to take care. You have to put your reply. You have to put that notification, I think 54 or 55 of 2020. That notification of extension has to be there. You have to give a reply along with that extension notification, and that thing will be taken care of. I told you now, all these are done on one click. So they have issued the notices without applying the mind. So you have to put your hard work and you have to give a proper reply along with that extension notification. Any other query?
I think that's end of queries, ma'am, from our members.
Okay. So shall we wind up the session then?
Yes, ma'am. Sure. Thank you so much, ma'am. Thank you so much. Even within 1.5 hours to 2 hours, you were able to deliver the whole amendments and updates and intricacies of input through this webinar. Thank you so much, and we would love to have you physically so that our members also can join more.
My honor. Definitely, I will be there. Looking forward for any opportunity where I can be there in physical and
Yes,
I can meet you all.
I
It
know.
will be my honor.
And we must appreciate you for your um, heights of this energy levels. Okay, so always whenever I heard from you, okay, so you are with same energy levels, whether it is 1 hour session or 2 hour session or 3 hour session or a full day session.
No,
Okay.
today I have a bad throat and congestion going on, so
Yeah,
I
yeah,
was a bit difficult.
yeah.
So I may
Understand.
have
Understand.
created some difficulty to you also, but I tried to cope up with that
Yes, ma'am. Yes.
because it's a changing weather in Delhi.
Okay.
Yeah.
Thank you so much, ma'am. Thank you so much for enlightening regarding GST updates to our members. Hope the members have enjoyed. Thank you, dear members, for participating in the session and making the session successful. Hope we'll meet Archana ma'am in few weeks physically in Guntur.
Sure, ma'am. Thank you so much, and thank you to each and every one of you who have participated. Take good care of yourself. Good night, and thank you to all the organizers once again.
Thank
It
you.
was my honor and
Thank
my
you, ma'am.
pleasure. Thank you
Thank you.
so much.
Thank
Thank
you.
you so much.
Thank you.
Thank you, ma'am. Take care.
Bye, ma'am. Take care.